Hello, we're here again with Mark Elliott, the division head for Southern Africa of Mastercard. It's nice to have an opportunity to interview you yet again.
Lovely to be here.
We're here at WEF in Cape Town, and the theme for WEF this year is financial inclusion in Africa, a theme that's very near and dear to the heart of Mastercard. Can we talk a little bit about what it means? Can you tell us what does financial inclusion mean for the layperson who doesn't know that term?
I think, simply speaking, it's really about giving access to the financial ecosystem to those that don't already have access. So it's about them becoming included.
This conversation that we're having is taking place now at WEF within the context of the Fourth Industrial Revolution. What does that term mean, the Fourth Industrial Revolution?
Well, I think we know that the Fourth Industrial Revolution is a big topic on the conference circuit, but when we break it down, I think there are probably some obvious use cases which are top of mind. Things like the Internet of Things, where wearables can pay for things on the go. And then we have things like artificial intelligence, where we kind of improve our understanding of data as we kind of get behavioral analysis coming through. So more optimal engagements with our consumers. So there's a variety of different technologies out there, along with things like blockchain, which we all know has got lots of potential for the future. So we can get carried away with those technologies a little bit, and they have dependencies. So let's face it, things like 5G are actually going to be super important if we want some of these aspects like the Internet of Things to be successful.
Absolutely. You at Mastercard talk a lot about the end of cash, and that being a very important objective on the continent in order to achieve a number of goals, including broad-based economic development. Can you talk a little bit about why ending cash is important and the role that it will play in achieving those goals?
Sure. So I mean, globally at the moment, cash still is about 85% of transactions. But the reason why we believe that displacing cash is so important is because there's that cost of cash, which we kind of think is around 1.5% to 2% of GDP. So that's around the cost of transport, the security around cash. So there's a huge opportunity to take that cost out of the ecosystem and replace it with electronic means. So that's really where we're coming from. And I have to be honest, I think that it's also in the interests of other constituents within the ecosystem. So it's not just something Mastercard wants, but it's something which I think governments and other players would like to have increased transparency. And indeed, think about the SME. The SME actually can avail credit if there's a better data set around their business because they have a track record. So we see lots of benefits of displacing cash and bringing more electronic means into the ecosystem.
Well, we're talking about SMEs and the African ecosystem. We know that a large portion of the African economy exists in the informal sector, and the informal sector generally uses cash exclusively. Can you talk a little bit about how including the informal sector plays into your strategic plans?
I think including the informal sector is absolutely critical if we're going to displace cash. But what we're going to have to do is we're going to have to see a variety of different changes take place. And that's really what the spirit of WEF is this year. It's about more inclusive growth. And so that's when we start to think about how can we deploy cheaper costs of acceptance. So a typical device costs probably around $400 today. There's an opportunity to replace that with something like a sticker which has got a QR code, one of these squares with lots of dots on it. That actually is something which we could send a payment to each other immediately with a sticker which just costs nothing. So it's a more inclusive way of a merchant who doesn't necessarily have an ability to accept electronic payments actually being enabled almost immediately. And that really starts to bring more people into the ecosystem. So what Mastercard's trying to do is to build that broader interoperability between all the different players, the mobile money players, the banks, and some of these more emerging retailers who are probably in that informal sector. So there's a wide opportunity for Mastercard with the informal sector.
So let's talk a little bit about some macro trends on the continent and how that relates to your strategies. We know, for example, that Africans have less than half the bank accounts that most people have throughout the world. We know also that Africans over-index in terms of ownership of mobile phones. Another thing that we know is that Africa, depending on which statistic you choose, something like more than half the population is under the age of 25. How do you put all of these different factors into the mix when you think about your strategies?
Yes, I think when you take a step back and you think, so what's the common denominator? It has to be technology. And what I mean by technology is probably the mobile, the handset. And so when you talked about smartphone penetration, probably around 40% today, growing to 60% relatively quickly. So the opportunity as we see it is, how can we obsess with the experience around using that mobile phone to facilitate payments? How can we think about bringing through more education around financial management and financial literacy? And then lastly, how can we think about giving more use cases so that we get that financial inclusion journey so customers can actually kind of broaden the experiences that they have within the broader ecosystem. But we also have to think differently as Mastercard about the way we approach the payments arena. So no longer is it simply about one use case or another, but can we take a step back and think about how we organize the ecosystem? For example, we've done a partnership with M-Copa, who actually are the solar panel providers. And in that space, what we've done is we've availed a QR code, so actually you can kind of pay for your utility bills leveraging that QR code. So that's a good example of how we're starting to work with partners in another way. Another example is how potentially we can work with FMCGs in case they want to go to the front line to the market.
Tell us what FMCGs are.
So fast-moving consumer goods. So let's take somebody like a Coca-Cola. So let's say somebody like a Coca-Cola or even an alcohol distributor wants to have a more direct relationship with a tavern within a township. How can we help decash? How can we take the cash out of that journey? And indeed, all the different steps about how that Coca-Cola bottle gets to the tavern. What can we do to take the cash out of that supply chain? So there's a lot of interesting opportunities within the SME journey.
Well, we want to congratulate you. We understand that Fortune magazine has a new listing which looks at the global corporations that are changing the world, and Mastercard has been named number 2 on that list, which is a very prestigious award. And so we'd like to ask you a little bit more about how this came to be and what your thoughts are around having been acknowledged as such.
So as Mastercard, we continue to push the boundaries, I think, around how we think about payments into the future. And we have a very clear strategy. As I said, 85% of the world's transactions are still cash. And what we see is a world where we need to continue to develop and to be relevant in both on a domestic and on an international basis. So as a team, we continue to think differently. We're curious about new opportunities, and I'm sure we'll hopefully continue to win accolades along the way.
Great. Well, thank you for taking time away from the meetings to join us today. Mark Elliott, thank you.